Today, folks, we're talking that cash stash for that stock market crash. I'm going to be summarizing how much cash I think you should have, how much cash I personally have against my 300K portfolio. And then I want to talk about strategies, what I'm seeing across the board, some concerns that I have. I think it's going to be a very educational, fun video. So in the clarity of my transparency, consider hitting that like button, folks. But let's talk about how much cash is appropriate and why am I kind of relating it to a stock market crash, because I don't think the markets are just going to crash tomorrow or something, and I'm definitely not stopping my investment strategy. However, in the current circumstances where I sit, I felt it was appropriate to start building this up. But first, does cash really matter in the beginning of your investing career? I know a lot of people like Dave Ramsey say, oh, you need to have that emergency fund first, but I honestly think that might hinder some of your growth in the beginning, because that's what I did. And I know a lot of investors out there, if you don't have kids, family, housing payments, and you have a stable job, I think you could almost use your investments as your emergency fund until you build up a nice sum of capital in the beginning, because that's essentially what I did. But it was around March of 2020 where I quickly realized the value of having a fully funded emergency fund when my career went belly up and my income really dropped in half, the markets dropped, and I was at risk of having to sell my investments at a down period to pay my bills. So that was like the first indicator to me that maybe it was time to have an emergency fund. So I've been building up about a 6-7% weighting emergency fund against my portfolio, about $20,000, nothing too extreme. A good portion of that right now is just sitting in a non-interest savings account. It's probably not the best place to be having it, but that's because I'm kind of in this transitional period. I've opened up a corporation. I'm doing a lot of stuff right now. So going into the beginning of next year, the way I want my entire emergency fund structured is I'm going to keep about that $20,000 in cash. I do not want to touch that. I want another $5,000 in roughly Bitcoin and gold. The majority of that is just going to be in Bitcoin. And the reason I'm doing that is a hedge against inflation. If Bitcoin or gold continue to outpace inflation and they kind of continue to go at the pace that they're going at, let's say Bitcoin, becomes a $2 trillion market cap. There's a lot of speculation here, right? But if it does, we could see a 5x, a 4 or 5x in the current price, which means a $5,000, $4,000 investment can quickly become like 15 or 20 grand. And over the next decade, if we see another devaluation by over 50% in the dollar, you're literally making back way more, probably about 30% more than you're going to lose. You always need to find a hedge, right? Because you just don't want your money sitting in cash. So I figure if my 20K cash is sitting there, it has to have some way of at least ensuring that it's not rotting to inflation. But that's kind of where I'm sitting at with that, because I also want to change my living position soon and a lot of other stuff. But also, in case the markets crash, guys, I want to be able to take advantage of a market crash, and just having that cash in case something crashes, considering we know real estate is expensive. We know the stock market is getting relatively valued here, guys. So it's just nice to have it in case an opportunity arises where I have enough capital up front where I don't have to touch my current investments, which leads us into the strategies, right? Like, how are we investing right now? And what do I see that concerns me a little bit? Well, we know the market's expensive, but I don't believe you should ever stop cost averaging in, just like I am. I'm still finding some good value in the utility sector. There's still some good value in the REIT sector. I like tech, but again, tech, you're paying a hefty premium for that, and you got to have a long-term time horizon, because there could be some short-term volatility. Microsoft is trading at like a 38 PE or something right now. Like, these things are getting highly valued. So I just want to be careful about how much you're driving into these things and finding the best value in the market, which leads me into this concern that I've noticed across YouTube, where everyone's becoming highly focused, and I don't understand why. And what I mean by highly focused is people are either a dividend investor, they're either a crypto investor, they're changing their strategy into crypto, or they just kind of pick this one thing and cling to it, and they just kind of detour from everything else. And I think one of the primary reasons that I've outperformed the market so consistently is I try not to base my portfolio investments off one pure style. Like, I love dividend investing and the passive income style of that, but I also recognize that Microsoft is up like 400% in the last 5 years, which if you looked at it before, you'd be like, oh, you have a 1.2% yield, isn't that attractive? But then you buy it, you don't end up using the dividend, and 4 or 5 years later, you've almost 5x your capital. Like, that's something that I think people overlook. And same with crypto, right? Like, I'm diverse to everything here, and I think some people either, like, they're so divisive on it all, when I used to be divisive on gold and silver. Used to think it was the stupidest thing ever, but now all of a sudden, guys, I've come to realize that all of these things can really serve a purpose in your portfolio. And it's weird because sometimes when some of them underperform, the other ones outperform. And when they get outperforming, you kind of trim it a little bit, and then you balance it out with the other things that might not be doing so well that you believe in. I mean, I did that in the crash when I sold Apple at a really high valuation to buy the banks at all-time lows when they were pumping out 6%, 7% yields, and now they're up 30 or 40% from where I was buying them. I mean, that's the opportunity that all of that diversification can give you. And it's something that's just, I think, far too widely overlooked. And I'm tired of, I know YouTube really benefits these really highly focused investing opinions about like just Tesla or just Bitcoin or just dividend stocks, but I think it's ignorant and it's going to lack in performance against being more strategic and understanding the companies you're buying rather than chasing the yields, because I think total return matters a lot more than just general dividend returns or just focusing on a cash flow based return. Like if you have, let's say, 100,000 in the market and you're getting market average returns right now that are hovering around 20 to 25%, you're making 20 to 25,000 a year annually in capital growth and dividends combined if you're putting all of that into the baskets like I do. Or again, let's say you have $1 million right now, right? Like you could easily get a capital gains of, if it's 20% of the current market and you're getting those average returns, that's $200,000. Like that's life-changing money. And I'd like to say that we don't know what the future is going to look like. Nobody does, which kind of brings it into this whole rounded conversation of once you get a scaled portfolio, I think it's appropriate, depending on your life circumstances, to have that emergency fund because that protects the capital that you have invested. But obviously keep that emergency fund in a way like that's going to give it a little bit of cash flow and really safe investments. And I know a lot of people like to park their short-term cash, which is also a good idea, into some options funds that have downside protection that can cash flow a decent yield of. I know a lot of people are into things like QYLD. It's purely based off what's going to fit best for you, because some people are just fine with the high interest savings account. But like I said, I'm trying to hedge a small portion of that cash with some liquid assets like gold and Bitcoin. But all of this combined, guys, makes me feel like I'm sitting in a place right now where I have a really professionally structured portfolio. It's yielding me, I think it's right around 3% right now. I'm going to have to get that weighting up. But as I said, I'm in a position right now where my strategy doesn't want any more tax implications. So I'm just kind of patiently waiting to next year where I'll probably rebalance the portfolio one more time, try and get my income with the money I have to maybe around 10 to 12,000 in annual dividends. Trying to get into that place where you're bringing in that 800 to 1,000 a month, I think is pretty incredible for cash flowing. But this is also trying not to hinder the growth side while keeping my growth stocks like my Googles, my Teslas, my Facebooks, my Apples. I mean, I want to keep those at a decent weighting. Structured balancing has really proven to pay off for me. So at this point, I want to pass the question off to you. What do you guys think about all this in that comment section below? Do you have a cash position? Are you weak on cash because you're in a really good income job placement and you're just trying to build your portfolio up? I'd love to hear about it. So stay cool, stay awesome, and I hope you have a wonderful day, folks.